Good afternoon. In this video, we're going to go over this week's watch list. Before I get into the video, I just want to go over a couple things. One is I did end up finishing February with 76 wins and 20 losses for a win rate of 79.17%. I did not meet my monthly goal of 80%. Almost every week this month I had well over 80%, except 1 week I had 68, and that's what that 1 week dragged me down below the 80% mark on the month. But still, the stats were very good. It was a good month, short month, and so March is going to be 31 days, a very long month. It always seems like the longest month of the year weather-wise, because of winter. And there is a couple things I'm going to point out before I get into the watch list. One is that OPEC this week on Thursday, and we have Powell speaking at 12:05, which is a really weird time. Not noon time, not 2, not 9:30, just 12:05. So who knows what that's going to be about. We'll just have to make a note of it and be prepared that it is there and something could end up happening. So he could end up saying something crazy or good, or so the market's going to end up reacting to whatever he has to say. So just have to write it down and make a note for it on Thursday when Thursday comes. Now, I don't have much on my bearish list. I only have a couple. But just because I only have a couple on my bearish and I have a lot more on my bullish side does not mean I won't change my mind. Not just I go based on what's happening. I easily flip my decision based on what's happening in the market, how the price is reacting and stuff like that. So the purpose of this is that if it's on the bearish side, if the market's weak, these have the probably higher probability of dropping the most, and vice versa, that if the weak is strong, the ones on the bullish side can provide the greatest strength moves going in the upward direction. So with that said, I have McDonald's here. Now I'm looking at McDonald's on the weekly. I know it's got an inverted head and shoulders right here. You get the left, the head, and the right. I mean, yes, if it gets over this 216.53 area, we should just say 217 area, that it's got a good chance of going up and retesting 230. But I'm also looking at it from the point of view that it's channeling down. So if it does manage to get below the low of day or gap down on tomorrow, that if it gets below the 203, it's probably going to go to 200. If it does get to 200, you got 196, then you have this 193 area. So 200 would be a big psychological number on McDonald's. But if it does manage to break below 206, I would definitely watch it for a push to definitely 200. I mean, this low of this candle is 203, but it could possibly break that if the market's weak and get to 200. Now, 200 would be the big psychological number where it could try to bounce, but it does break that. It's probably going to go down to 196 and 193. So definitely be watching that. And UPS is the other one. Now, UPS, it's got the descending triangle going on the weekly. As you can see, it's making lower highs and it's flatlining at the 157 area, 157.50. So if it does manage to break below that area, you can get down to the 155. The 155 is the line in the sand. If that ends up breaking, it's going to probably end up going down to 145, 140, and probably retest this gap up at 135. I highly doubt it will break this. Usually what happens is when you have strong gap ups and they take off and they just continue to run, that they'll come back and retest the gap support. Now this is called gap support right here, this 135 area. So if it does get weak and manage to get to 135, there is probably a 90% chance it's going to bounce at this 135. So I would definitely watch that area. It's very unlikely it's going to fill the gap. It's going to test it and probably bounce a little bit to maybe, maybe 145, maybe even 150 before coming back down, if it comes back down and fills the gap. So that's how these gap supports and gap resistance works. They hardly ever break on the first try, especially if it gapped and took off. Now, if it gapped a little bit, like say if it just hypothetically it just gapped up and went to 145, yeah, it could come back down and test the gap support and probably come back and fill the gap because it didn't take off that much. But when it went from 135 to 178, that's a pretty big run for UPS. It's not going to break the gap support and fill the gap right away. It's going to bounce and then drop. Now on the bull side, now if you went on Twitter, I posted on Twitter earlier today that let's see. I posted the chart for the CPCE, which is the options equity put call ratio. I go by stock charts. I do not go by TOS. I do not go by E-Trade. I don't go by anyone else. And the reason for that is that the put to call ratio doesn't look as reliable, I could say, or doesn't look as good chart wise as it does on stock charts. If you look at SPCE on stock charts, then you go look at it on TOS, you're going to have a different number. If you look at TOS versus stock charts, you're going to have different numbers on put to call ratio, and you got to pick one instrument and stick to it. And I always use stock charts. So when it comes to the put call ratio, and I looked today, I noticed it was at 0.63, which is the highest level it's been since October 28th. Now I'll bring up SPY. There's a reason I'm bringing this up. Now, let's see, SPY 28. Why is it? Okay, never mind. Where is it? October 28th. There's this candle right here. Well, right. Let me blow this up. Right there. That's the 28th. Okay, and then this is the big squeeze. As you can see, it closed right here, gapped up a little bit, and took off. Well, it looks like it gapped up tiny bit and probably dropped a little bit at open, then just took off, made a little J-hook pattern. So that's what's happened on that particular day. So if you look on the stock charts, I'll bring it over. Hold on a second. Pause the video for a second. Okay, I just had to move some windows around. Now, as you can see right here, this is where it's at going into Monday, and this is where it is on the 28th, right there. Now, it did, drop a little bit, then pop higher, then it just got smashed. So, which is right here, where it was at the level, that's 0.63 level, then it dropped a little bit, and then got smashed a little more. The put to call ratio went a little higher. Now, I'm not saying that the market can't drop, because it can drop more. I'm just saying that tomorrow or Tuesday will probably be a big squeeze day to squeeze out all the the puts, and reduce the put to call ratio. Now, going back to, let's see, we can use this right here. Yeah, as you can see, it could still drop with the put to call ratio being high. It just means that the puts could be high here. It just gaps up, squeezes them out, gets people bullish, and then it drops more. And they just, they play these games where when the puts are heavy on one side, they'll gap it up and they'll squeeze them out, get people bullish again, then they'll drop it more. So that is what could possibly end up happening, like it probably did like it did right here. It was put heavy, they gapped it up, got people excited thinking it was reversal, then they dropped it more. I mean, they could do the same thing over here. I mean, we could gap up to 381 and get a push to 385, 386, maybe even 388. And who knows from there, that will bring down the put to call ratio, and people may jump onto the call side thinking we're going back to all-time highs. By the dip crowd will get excited, and then who knows what will happen after that. So that is the psychological thing behind this. Is like they did right here, they dropped it and they gapped it up, got people thinking it was a reversal, and they pushed it down harder right there. So we could end up seeing this kind of a scenario before the reversal happens. So you've got to be aware of that. Just don't go with calls thinking we're going back to all-time highs. We could end up seeing what's happening right here. Gap up, have a green day tomorrow, Tuesday, then we go lower. possibly go lower, or we could just gap up and just go back to all-time highs. I don't know. We'll just have to see what happens, but just beware that that scenario is there, and that's what I'm looking for. So we'll adjust accordingly in the room. And if you're not in the room, you should be, because this is the edge that you need in trading at all. You know, I gotta find that edge and look ahead and kind of like anticipate what's going to happen and look at it from a psychological point of view, which is like I always try to do. And sometimes I overthink it. Overthinking can be a good thing and be a bad thing as well. So if you're not in the room, the link is in the description of the video and on the bio section of the social media account. So with that said, we'll get into the bullish side. Now, I was very bearish on Roku for a while. Now it finally has pulled back, let some arrow, and it's testing weekly support at that 388. I wouldn't be a bit surprised if we see Roku up to the 440s, 430s again. So the thing I like to look at a lot, and I'll switch to the 10-minute on this one. It doesn't really show it on that one, but I'll go back to the hourly. What I like to look for is this disconnect with the RCT trend line. See, every time it gets disconnected from this orange line right here, it acts as a magnet. It dumps below it, it gets pulled away. It gets above it, it gets down, it drops to it. So this is where you gotta look, and it got too far away from it. Now I know on the weekly it's down at 255. I highly doubt that Roku will go back below 300, let alone 255. But I know anything is possible. But I think that if Roku gets above this 398, it's going to test 400. It gets above 400, it's going to probably go to do 408, let's see. Get a little bit of an area right here, and 408, 410 area. Then you get the 414, 415 area. Then you get looks like 419, 420. Now you gotta remember, support and resistance is not an exact number, it's an area. So this whole area will be an area to watch from 400 to 420. Now if it gets over 420, it could probably fill that gap up to 440. So Roku could make a bounce this week, especially if the market is strong. Now the daily is considered oversold. The weekly still looks like it wants to go down, but Roku is Roku. It doesn't care about anything. It just wants to do what it wants. Now Walmart has gotten beat down. I mean, Walmart, it's the RSI on the daily is below 24. Where is it? 25, 24. I mean, this is a good support area right here in the 130 area, 129. So we're likely to see a bounce. I mean, it's got a descending wedge right here. It's actually just a descending channel. I mean, it's just going straight down, but if it does get over this 130 area, over 131, we could end up seeing push to 133, 134, 135, 130. Basically every whole dollar you'll probably could see a resistance on that, but the biggest resistance is going to be 135 area and the 138. So definitely be watching Walmart. I mean, it has not been this oversold on the daily in a long time. I mean, let's go out, let's see if we go out a year or something, 2 years. As yeah, I mean, Walmart has only been below the RSI on the daily like 2 or 3 times in the last, what is the date of this? August 2019. So 2 years, year and a half, it's only been under there a few times. So you got that right there, and right there where it came close to being below 30. So then it just rocketed up right here. So I think the same thing's going to end up happening with Walmart. Get back to my other chart where things look better. Okay, QCOM is another one. Now QCOM's like a fine line here. It's like in nowhere, in no man's land right here. I mean, if it holds this 135 area, it's likely to probably have a good rebound. But the problem is, if it does manage to get below the 134.50, it's in no man's land, meaning it's in the middle of the gap, and it can drop down to the 130s. So make a point that mental note that does break these lows from the week, that it's got some room on the downside to at least the 130. So, but if it does manage to get over the 130, 138, it's probably going to push to 140. Then you get the 141. Then you're going to have this big area right here in the 143, 145 area. 145 is going to be a pretty big area on the for QCOM. Then you also got the 146, 147, 148, 149 area. Now 150 is going to be the real hard area for it to break. Now this is where you get into that gap resistance. I mean, it dropped a little bit. It came back and we tested it and it got rejected and it just fell apart, and it probably due to the market sell-off. Now if the market didn't sell off, it probably would have filled the gap right here, but it is what it is. So I would imagine if it does make its run, it's probably going to get to 150 and possibly reject or chop at 150 before filling the gap. So Costco is another one. Retail just got hammered, and I think retail ended up making a turnaround. Costco, I mean, it's just, you get like a what do you want to call it, a descending wedge right here, right down there. It breaks out of that over the 335, probably push to 340. You can get the 342 area. Then you have 345, 347. Then you get the 350. 350 would be the big area for resistance, which is on the daily, and big psychological number. But if Costco's got any strength, it doesn't care. It could go straight through it like nothing. So I think Costco's due for another big run. Retail's just got hammered. Apple. Now I know that Apple on the weekly, it broke out right here, broke out over this, like let's see, 118, we'll just say 118.50 area. It broke out and it's coming back to retest it. It always likes to retest the areas it broke out of, which is usually end up being a bullish sign if it rebounds and bounces off that. So we could see Apple making a bounce this week. If it does manage to get over the 125, it gets over 125, it's probably going to end up pushing to 127, the 128, 130 area. Now 130 be probably a big area for it to break, because it's a lot of actually 127 be a big area too on the daily. Then you have the 128, 130. Where is 130? Right in there. So yeah, this whole 128 to 130, it could be a big area. So 127, 128, 130. Then you get the 134, and you get the 137. I'm not quite sure how high this could go. It depends on the strength of the market. I mean, things could end up going back to all-time highs, or just like I said, could just be a one-day pop, then more of a drop. So have to adjust to the market conditions as they play out. Now Spotify is another one. I know Spotify had a huge weekly candle, but I don't know, Spotify, just every time it makes a big dip, it just ends up recovering, and it got down to they get down to 295.34, and it stayed above 300, which is usually a bullish sign for Spotify. So it did test this area right here, 294, 295 area. It likes to make strong moves when it's below 300. Well, I shouldn't say 300, I should say 308. But I think if it gets above 308 again, it's probably going to end up pushing to the 320, 326, 325, 326. Then you got 334. I'm just rounding up. I'm not calling out exact numbers because it's not an exact number. 337, 340. And you get this 350 area that's going to be pretty big. But I think that Spotify could end up at least coming back up if the market's strong, testing the 340. So I would watch that. And yeah, another one I'm watching is Home Depot. Let's see, Home Depot, another retail that just got smashed. Bring it out just a little bit. Now I know that it's kind of like on the weekly, it's kind of like flagging a little bit. If you want to just draw a line, I can't suppose I can draw a line. When you start seeing this stuff all the time, you don't really need to draw lines because you just see it. You can see it's kind of like a bull flag going. If you want to, I mean, that could be just a giant weekly bull flag on Home Depot. So I'm looking at it that if it gets over, we'll say 260.50, push to the 262 area, 265, a little bit of resistance, 267, 269 area, 270 area is going to be a big area, and that's where the gap resistance is. From ER, it will likely probably reject that a little bit, possibly chop or pull back from the 270 area before filling the gap at Home Depot. But if the market's strong, we have strong recoveries or stimulus news or any other political noise that comes out that's decent or good news, or the market thinks it's good news, that could fill the gap right away. So that is going to do it for the watch list. But like I said, just because I have bullish right now or bearish right now does not mean that I won't change my mind or change my perspective on it based on the market conditions and the action of that particular day or any news that happens to drop. So that's going to do it for the watch list. Please like the video, subscribe to the channel if you haven't already, and thank you for watching. I hope to see you in the room.